The signals of candlesticks shows us when there's a change of investor sentiment. The confirmation of that change of investor sentiment can be seen with a candlestick signal, such as we saw the morning star type signal on the 200-day moving average in the Dow, and then the close above the T-line, the 8 exponential moving average. And notice what happened to the Dow once it stayed above the T-line. When it got to the 50, there was a little bit of consolidation, but it showed us that they couldn't close it below the T-line. The uptrend was still in progress. We expected it to come up through the 50, which it has. Notice what it did even today. It came right down to the T-line and the 50, used it as support, and traded back up. This is more evidence and creates more confidence for the candlestick investor to stay long and or even look for more strong trade possibilities. The NASDAQ also was confirmed with a Morningstar type signal, a doji gap up through the T-line. And notice how the strength of the uptrend remains strong, that not only are we above the T-line, but we also use what we call the 3T line, the 3 exponential moving average. And notice that the NASDAQ hasn't even been able to close back below that level, which tells us the investor sentiment in combination with the candlestick signals is still very strong, that our uptrend remains in progress. Utilizing that information is when we apply it to candlestick patterns and signals, such as the fry pan bottom. As we saw in PEIX, our recommendation to buy was based upon the doji sandwich that broke us out through this level, told us we were in an uptrend. They sold it off yesterday, but notice where they didn't sell it off to. They could not close below the T-line. That was a candlestick sell signal, but not confirmed yet. Now, had this opened lower, that would have been confirmation that the sellers were in control. However, the fact that we did not close below the T-line kept us in the trade and kept us in a situation that told us we would still stay long, and we had huge profits, over 50-60% return profits just on this day, let alone on this day right here. So when you add up all the probabilities of a strong trade, such as staying above the T-line, showing candlestick buy signals, having a fry pan bottom, and a doji gap up, tells us we're probably in a situation where they've broken out of the fry pan bottom. The T-line still remains our indicator of being an uptrend. Now we're trading above the 3T line. The fact that they gapped this up off a doji type day through the resistance level gives us a very high probability target, which would be extrapolating where the trend would continue to catch up with this trajectory, meaning we should have a very strong price move from this level. This is not rocket science. This is just common sense put into a graphic depiction based upon the information that the Japanese rice traders have provided us for 400 years for being in successful trades. That'll be it. We'll see you in the chat rooms.